Hi, welcome you on the Arthatadnya channel. This time we would like to give you an overview of HDFC Bank, which is India's top private sector bank. In this HDFC fundamental analysis, we would like to give an overview of bank history, its shareholding pattern, business model, key financial numbers, stock market price, and current update. And finally, we will like to give our view about the stock. Let's see some key milestones which company has achieved since its foundation. In 1994, the company was incorporated with its main promoter, which is HDFC Housing Finance Company. In 2000, company called Sesame.com, which has been formed by a strategic alliance between HDFC Bank and Singapore Telecom e-commerce company to offer e-commerce solution for the Indian market. In 2005, the HDFC Bank inaugurates its first ATM that was into the hotel. In 2010, HDFC roll out systematic saving plans with variable interest. HDFC Bank replaces ICI as number one private retail bank in India. HDFC also ties up with UAE Bank for online remittances. In 2015, HDFC Bank and Snapdeal, in partnership with Visa, launch India's first co-branded e-commerce credit card. In 2020, there are more than 5,400 banking outlets, more than 14,900 bank ATMs, and presence in the city and towns into more than 2,800. With this key milestone, one can easily see that HDFC is very innovative and technology oriented bank. It is also one of the top credit card financing companies in India. Let's look at the shareholding pattern. As on March 20, 37% shareholding is held by FIIs, foreign institutional investors. 26% held by the DIIs, and remaining 26% held by the promoters, which is mainly HDFC. 11% investment held by the individuals. Business model. HDFC Bank offers wide range of commercial and transactional banking services and treasury products to wholesale and retail customers. The bank has three key business segments. One is wholesale banking services. The target range from large blue chip manufacturing companies in the Indian corporates to small and mid-sized corporates and agri-based businesses. Retail banking services. The objective of the retail bank is to provide its target customer a full range of financial products and banking services, giving the customer a one-stop window for all banking requirements. Treasury. With these businesses, bank has three main product areas, mainly into foreign exchange and derivatives, local currency money market and debt securitization, and equities. HDFC Bank was the first bank in India to launch an international debit card in association with Visa and MasterCard. Financials. The bank net revenue increased by 18.2% for the quarter comparing to the previous quarter. Net interest income grew to 15,000 crores from rupees 13,000 crores from previous year quarter. This is mainly driven in growth in advances and deposits, which is nearly around 20 to 25%. If we see profit after tax, which is grew consistently from year 2010. Earning per share, again inconsistent with the profit, this is also grew consistently. Only in the year 2020 you can see a drop. This is mainly hit because of COVID-19. Dividend per share also, you can see that company was giving handsome returns to its shareholder. However, in the year 2020, the company do not wish to give dividend to its shareholders just to counter with the COVID-19 pandemic and its economical impact. On the right side, we can see the key numbers from a banking sector perspective. The net margin is 4.3%, which is best in the industry. Net interest margin is what normally bank takes advances and deposits from customer, and it gives that money to the people who wish to take loan. So if bank takes an advances and deposit at 8% rate of interest, it gives this money to the borrowers at 12.3%. So at the end, bank is retaining 4.3% as its net interest margin. HDFC's net interest margin is best as compared to its peers. CASA deposit, which stands for current account and saving account ratio. It is one of the metrics to assess the profitability of the bank. So CASA has increased by 24% this year. Capital adequacy ratio, which is at 18.5% in the last year as compared to 17%. So bank was able to maintain a sufficient capital adequacy ratio. As per the regulatory requirement, it's only 11%. Gross NPAs, the amount of loans and EMIs where bank is not able to collect its money called as non-performing assets. If bank could not collect the money within 90 days from its dues, it should be classified as NPA. Currently, HDFC's gross NPA is 1.26% and its net NPA is 0.36%, which is very decent if we talk about the banking sector. PE ratio of HDFC is 21, which is quite high, but if we compare with the industry, it is attractive. Book value per share comes to around rupees 330. Overall, if I talk about financials update, HDFC looks pretty good on the paper and a good company. If we see share price behavior from the year 1998, we see it is in upward trends and consistently giving handsome returns to its shareholders. The only waterfall down we can see in the year 2020, where there is a correction which happened because of the COVID-19 pandemic, which has a larger impact on Indian economy. Current update and scenario. In the March 2020, Government of India has declared a mandatory lockdown for 14 days, because of which bank was getting a hit on its balance sheet and on its NPAs. Further to this, RBI has also extended the moratorium period with another 3 months, which would be again a worrisome area for the banking industry, as most of the borrower would opt for the moratorium, and there would be a slow inflow into the banking sector. However, HDFC has made it very clear that they have made the sufficient provision to their books of accounts, which is in excess of RBI prescribed norms. The very much important scenario here is how much is the impact of COVID-19 on the balance sheet of banking companies, because it is a backbone of our industry. If if the small, medium size and large cap companies could not able to pay their dues on time, it would ultimately having an impact on the banking balance sheets. However, if we see the overall structure of HDFC Bank, looking at its diversification into the business of wholesale, retail, credit card, housing finance sector, and etc., it looks a diversified company where the risk management is pretty good. If there is a correction happens around 100 to 150 rupees, it's definitely a good bank to buy the shares. I hope you enjoy this video. Please subscribe the channel and hit like button. Thank you.